So our business, essentially what we do, or we are turnkey service providers, assisting investors investing in distressed real estate. So from things like tax liens through foreclosures. Uh, our investors are worldwide. We have investors in Singapore, Norway, Europe. So essentially you can do it from anywhere, and we handle everything for our investors.
For investors, would you please give us some advice?
For some advice on our services,
Yes.
so on our services, essentially what investors would do, international investors would do, is they would um, fill out a W-2 form, essentially get a taxpayer ID, and then they deploy their capital with us, and we handle everything from there. So everything's invested in the investor's name, so it's their investment, and we handle all the acquisition, the fixing, flipping, and investors are making about 16 to 22% return on their investments each year.
And how about you said the passive investing with your control?
Yeah, so passive investment is essentially, other than having to give us the capital, the money to invest, everything is done in-house. We do everything. And when we say that you're in control, it means the investment is still yours. So if you're not happy with the services we're providing, uh, which doesn't happen, but if you're not happy with the services we're providing, you can take it back over and find another service provider or do it yourself if you want. So that's you being in control. So we can't. If something were to happen to me, you still have your investment. So it's always protected.
For investors in Houston, any advice for them?
So Houston is. I got my start in Houston about 15 years ago, and it was a great market about 15 years ago. Since then, it's what we call kind of maxed out. There's a lot of institutional investors in Houston now, and the margins in Houston are not as good as they used to be. So we'd like to focus on smaller markets that would be outside the scope of Houston. Just because there's a lot of opportunity, but the margins just aren't that good. We like investors making 16 to 20% in Houston right now. If we were investing in Houston, it'd be closer like 6 or 7%.
Thank you. You mean the rental or selling or?
Both markets. And we are coming into more of a rental type of market. So Houston will be good for what we call a cash flow market. But again, the acquisition cost is too high to make it an attractive investment for our investors. So we stay in areas like Austin, San Antonio used to be a big one for us a number of years ago. But again, it grew out. Too much institutional money came in. And it just it pushes out investors like you and I who want to make big returns, not just 2% or 3% on their money.
How about you said about the small market, the small places? What do you mean about it, for example?
So right now we're investing heavy in the southeast. We invest in two markets in Savannah, Georgia, and Augusta, Georgia. And what we tell our investors is that we invest in what we call recession-proof markets. Most investors right now know the economy is going to take a little bit of a turn, at least a correction, if not another recession. We think it'll be just a correction. So we're in markets that are first-time home buyer properties and have like an economic push. There's schools that are being developed or factories that are being built that will sustain any kind of market adjustment. So those are the markets we're in now. Once those are built out or the inventory goes down, we'll move to another market. So that's essentially where we're at right now.
Thank you for giving us such a great new opinion.
Yeah.
And what do you think for the overall the real estate trend?
Where we are. So we're at kind of I would call it like a plateau. We do a lot of data checking, and the data essentially tells us that wages, the cost of real estate right now is exceeding the wages that we make. So that's going to slow the market down quite a bit again. What that's also going to do is it's going to make those deregulated mortgages spike up again. So that's going to create that's essentially what's going to create the downward dip in our market. The magic number is 18 months. I think we're probably 12 months out from seeing that. But it's great for us because we're in distressed real estate, so it's a good time to be in fix and flips or cash flow because millennials are not buying homes. They're renting homes, so it's a great business to be in for cash flow as well.
Thank you very much. Anything else you'd like to share with us?
No, that's it. Absolutely.
Thank you very much.
Thank you.